Hello everyone, Cory Mitchell here with TradeThatSwing.com. This is the buy and hold stocks list update. I updated this on May 12th, so quite a few stocks to go through. The list grew a little bit. We'll come back to the stock list. There's a few things I want to discuss. So there's some basic stats up here. I'll post a link to this article below. And let's just go down here. What we're looking for is basically long-term earnings growth, steady earnings growth. We can see a few different criteria here. So we want to see increasing sales. We want to see increasing earnings. On average, about 7.9% a year, about 8% or more. And we want to see earnings don't have to increase every year. If you look at even great companies, they might have a year where they make $5 in earnings, and then the next year they make $4.75, and then the next year it jumps up to $5.50. So these are longer term type trades, often held for multiple years. So it's pretty rare to get a company that just increases earnings every single year. But what I'm looking for is basically that earnings increase kind of over 2 or 3 year periods. So it's what I'm looking for here is basically earnings 8 years ago, or earnings 5 years ago were greater than earnings 8 years ago, and earnings 2 years ago were greater than earnings 5 years ago. And kind of every couple years, I want to see them moving up overall. So that's what that's looking for. This is to help avoid companies that might have been done well in the past, but this year they're going to have a really crappy year. So we want to see at least some growth this year. This growth estimate is a 5-year average, so it's kind of, well, they're not always accurate what analysts predict. It does give, an assessment of how that company could do per year in terms of earnings growth over the next 5 years. And it helps if that company has a history of earnings increases each year. So we'll look at those stats above. Those are listed above, as well as a whole bunch of other ones in these graphics. Max drawdown, maximum of 60%. This will eliminate some stocks, like Nova Nordisk was on here, the prior list, but I think it might be right around 60%. But due to that decline, it wasn't quite beating the S&P in terms of this anymore because it had such a big decline. And generally, I'd prefer to hold a little bit more stable stocks in the long-term portfolio. That doesn't mean you can't swing trade those or invest in them as well, those more volatile ones. But obviously for a specific list, a specific strategy, they have to fit within certain parameters, and sometimes they just fall outside of that. So yes, and only 17.8% of all North American stocks, that's Canadian and U.S. exchanges, meet that criteria. So that means 82% of stocks have had a more than 60% decline. That includes dividend reinvestment and is only based on closing prices in the last 10 years. So when you factor in, if you didn't factor in their dividends and you looked at intraday prices, that number would jump to probably about 90%. I think people think stocks are more stable than they are. So almost 9 out of 10 stocks pretty much have had a 60% decline or greater at least once in the last 10 years. We're trying to find the ones that are a little bit more stable than that. Price above $5, average volume, you might want to increase this. This is 0.3 million, but again, this is long-term holdings. We don't need these stocks to do a ton of volume, although you may want them to. That's up to you. Annualized 5-year return, at least 4.5% per year greater than the S&P 500. We're looking for those stocks that generally, because of this, they're just steady, strong performers, they're going to generally outperform the market. A little bit lower P's after a pullback. That might be the time to pick these up. This is not an article about when to buy these. This is not a portfolio per se of just go out and buy the list. What this is a list that I then look through and decide when I'm going to buy them. a certain stock might have pulled back 20%. Earnings are still great. It's like, okay, I'll hop in and buy this. Maybe it has a chart pattern setting up that I like. Or recently, a lot of these fell when the overall stock market declined. Now we're seeing the stock market start to improve. That's a time we can potentially step in and buy some of these. I will not own all of these. There's just way too many. But I am going to go through the list, look at ones I like, look at the setups, maybe do some more thorough analysis. You can see here a ton of criteria. So I might look through some of these and decide which ones I prefer over others. And I would recommend you write down your criteria. Let's see. Just reduce me there a little bit so you can see the whole list. Whichever ones you pick, write down why you picked them. Obviously, there's some statistics shown here, but there's, I believe, 29 stocks on this list. So if you end up picking 5, why did you pick those 5? Why did you like them? Write those down. Over time, you'll start to notice things that tend to work better than others. But by tracking those things, that's how you're going to improve. Let's just go through this list here. There's a couple things to note. So yearly EPS growth 5-year average. So this is historical, how much the company has grown earnings per year on average. So this one, Aon, 17.8% yearly EPS growth over the last 5 years. Median for the S&P 500 is 8.9%. So they're beating that significantly. This is expected yearly growth, so this would be based on analyst estimates. Analysts are calling for about 9.9% yearly growth. That's the median estimated average for EPS yearly growth in the S&P 500. 19.6 expected for this stock. 10-year annualized stock return. So this is a per year. Basically, if you take the whole, how much the stock moved up over 10 years, and you calculated how much would that be per year to get that total amount, that's what the annualized amount is. S&P has an annualized return of 12.6%. So this one, 22%. So you're beating the market by about 10% a year in this stock. And most of these are going to be somewhat similar. Apple, a familiar one. You can see 15% yearly EPS growth. Pretty much the same expected going forward. That's kind of nice to see when it's kind of like what's expected going forward is the same as what they've already done. When you get a really drastic difference, sometimes it's like, could they actually get the expected earnings growth they're expected? Sometimes I kind of am looking more like, if a company can steadily produce 17%, that's pretty awesome. That might be better than they've only produced 9% in the past, but they're expected to produce 50% in the future. It may happen, but it's nice to see the track record if we're going to be holding these for longer periods of time. For swing trades, sometimes better to look at those, more speculative stocks that are expected to have really big returns, because you may get the pump in expectation of those returns, but a lot of those companies don't end up actually producing what's expected. So those might be the shorter term type trades, whereas we're looking for, with this list, buy and hold. And again, you don't want to come up with your exit. So again, this is not just buy this whole list and hold it forever. This list does get updated every couple months. And you'd want to come up with your entries and exit rules, as I mentioned. AMAT, 19.5%, 15.6%, 25% yearly average return. So you can look through these, ANET, APH. Some of these dropping off a little bit or expected to. That's okay. Still pretty good numbers compared to what's expected of the S&P 500. A few of these getting a little bit closer to what the S&P 500 would produce, like these ones, Garmin and HEI. 8.3%, 8.8% EPS growth over the last 5 years, average per year. and expected about 9.7, 9.5. So that would even be a little bit below what the S&P has done. You can see these stocks performed quite well, still outperforming the S&P. There is something to be said about that steady performance if they can keep that up. This one, 12%, expected to be growing a little bit more. This one, really high growth over the last few years. Actually, all of these ones expected to taper off a little bit. That's, can still be okay as long as you're not overpaying. You don't want to be paying for this kind of growth when this kind of growth is expected going forward. So you gotta, kind of look at going forward what that stock's going to be priced out at, what might be a good price to earnings if you look at those types of things. These ones really high recently, dropping off a little bit. Now really strong, expect to be a little bit stronger in the future in terms of earnings. Some of these other ones pretty steady there. This one expected to taper off a little bit. I will give you this big chart one more time just to see a few different things on here. I'll just run through these quick. So this is 5-year average. So this is the yearly earnings increases per year over the last 5 years. Expected, so yearly going forward over the next 5 years, the average. Annualized 10-year return, so basically what the stocks returned per year. Current year growth estimate, next year growth estimate, 1 year return, that's for the stock price. Price versus 52-week high, this is basically, I'm recording this during the day. So, for example, this one that says 102.1, that means whatever the prior 52-week high was, we're 2% above it as of midday, May 12th. If 80%, that means it's 20% below the 52-week high. So this is basically a percentage of the 52-week high. Let's do one more example. 91% for Federal Signal. That means it's about 9% below its 52-week high. So you can think of it, 0 is the 52-week low, the 52-week high, wherever we are relative to that. So if the 52-week high was $100 and we're at $91 right now, that would be 91%. Sales 5-year average, this is how much sales have increased per year on average over the last 5 years. This is if dividends have increased and what the average increase is per year in the dividend rate. The current price to earnings ratio, you can see some pretty high numbers there. Strong stocks often trade at higher P's. Forward P, a little bit lower because earnings are generally increasing for these companies. Peg forward is an estimate of how kind of good of a value a company is. One is considered good, so it's looking at the current price versus earnings expectations going forward over the next 5 years or so. And so we can see, like a 1.4 would be a little high. Forward yield, this is just the dividend yield, 3-month average volume, your max drawdown over the last 10 years. Remember, this includes dividend reinvestment, which is going to reduce losses a little bit. So you might have had a 30% drop, but if a company pays a 5% dividend, that would, over the course of a year, if it dropped 30%, 5% would be chewed back by the dividends, so it would only be a 25% drop. And it only includes closing prices, not the intraday lows. Financial health, so this is based on Stock Rover, which is what I use. I'll post a link to them below the video as well. Really great platform, this whole thing, all these stats come from them. Buyback yield, how much they're buying back of the stock. I want this to be 0 or above. I see one on here, 0.1%. That's pretty minor. They might have issued just a tiny bit of shares. Shareholder yield. So we want this above 0, or this one I guess snuck in there, 0.1. 5-year earnings per share average range, 5-year earnings per share price to earnings range. 5-year price to earnings range. A mouthful. So this is showing what price earnings ratios have been over the last 5 years. So we've been as high as 78 on this stock. You can see we're up near the upper end of that range. Let's find one over here. This one, we've been as low as 20. We've been up near 140, so we're the little near the bottom of that range. You can see most of these a little bit pricey compared to their 5-year average range. Again, you'd want to assess that when you want to buy them. EPS 1 year change, and a higher PE doesn't necessarily mean the stock is going to fall. I think that's kind of a thing. It can get more expensive, or as earnings increases, the PE just kind of stays the same or drifts lower because earnings are going up so much more. EPS 1 year change, you can see most of these positive, but you'll get the odd one that had a drop. That sometimes is a deterrent to me if I'm kind of looking for that steady growth and there's a really big drop in there. I'll usually go through what they've been doing every year. Are sales still increasing? That sort of thing. And again, we have 29 stocks to choose from. We can choose the ones we want. Sales 3-year average. This is how sales have moved up per year over the last 3 years. EPS over the last 3 years. And this is the 5-year return for the stocks. This is total return. If you invested 5 years ago, what would you have made in the stock? So some pretty big numbers. And yeah, so that's the list. Like I said, I will post a link to the video, link below the video. This article does get updated every couple months. At the bottom, you can see historic lists. A lot don't change, but there is usually some shuffling of stocks on the list. But there's quite a few on here that have been on these lists for a long time. So that's the buy and hold stock list update for May 12th. Happy trading out there.